Hi there, Serial Trader here. I want to do an update on the major US indices. Now, looking at the SPX 1 hour chart, we continue to surge higher here in what I'm still considering to be a fifth wave of C of a potential wave X. But let's just go through a different count briefly before I dive into these shorter time frame details that I want to show. So let's just start with a real blank chart other than just the action off the bottom here. So let's just ignore this entire decline as far as labeling it. And let's just purely look at the action off the bottom. So you can make a pretty good case. So you got an A up, B down, and that we're doing the finishing touches of a C wave for a corrective zigzag. This interpretation would suggest a move down to take out those lows, as a zigzag is a corrective pattern, right? So that's the count we've been kind of running with here in its most basic form. A three-wave move off the bottom, right? Now, you can also, at this point, make the case you get five waves up off the bottom for wave 1. This is your wave 2 pullback. You got a wave 3 up, wave 4 that did not overlap with that wave 1, so that's valid. And now we're working that fifth wave. Now, you can argue either scenario. There's a reason I like the ABC scenario better, and that's because this wave 3, if you just look at the relationship between wave 1 and wave 3, let's see here. Let's just throw up the equality level. And wave 3 didn't even quite travel the same distance as wave 1, so it wasn't even quite equal in distance to wave 1, if we're going to label that as a wave 3. And also the characteristic of wave 3 typically is like this, real sharp, real powerful. And in this case, this wave 3 has a shallower slope than the previous wave 1, so that doesn't really meet the guideline for the right look of a wave 3, and that it didn't even travel the same distance as that wave 1. So there's that. And then what else do we got here? But that doesn't completely rule out that this is potentially 1, 2, 3, 4, 5 up. Technically, it's a valid count, even though there's some things not to like about it as far as the characteristics. But even in this case, if we're doing a five-wave move off the bottom, okay, in this case, five-wave move off the bottom would suggest that the larger trend is now turned up and that any pullback should not take out those lows. But nonetheless, after you complete a five-wave move, which we're likely very near to doing here, after you do a five-wave move, you still need a sizable corrective pullback, and just throw up some fib levels here. And you got your 618, your 50, 382. So if we do that, you would still be looking, once we complete here to the upside, you'd still be looking for some sort of corrective three-wave decline off the top. So even in this extremely bullish scenario, which basically says the lows are in and that we're eventually going to work our way up to new all-time highs as the sequence progresses, even this count suggests that we're nearing the completion of five waves up, and we'd be looking for a corrective pullback, a sizable one at that. And look, even from the current levels, just doing a fib pull, let me just make sure it's right on here. Even doing a fib pull from current levels, even just a 38.2% retrace gets us into the 2600s, and that'd be kind of just a minimal retracement. More common would be a 50% or a 61.8%. So there is that. So not that I'm favoring this count, I'm aware of it. Certainly a possibility. And what will really tell the story is when we do make our move down, what does it look like? Does it look like a nice corrective pullback and it starts finding support? Or do we do something far more directional and impulsive looking and just dump? That's going to be the tell, is what does the drop look like once it takes shape. For now, we don't know. All we know is we have a potential five-wave move off the bottom. Now, I don't like that, as I said, but potential. definitely more favoring the ABC scenario, where we're in the fifth wave of wave C, and not the fifth wave of an overall impulse wave. But at this point, you can make the case for either one. I'm currently favoring this one, but what'll really be the tell is what it looks like when we come down here. Now, what I was going to go through on this hourly chart was I wanted to apply a little lesson yesterday about fifth wave projections. And under this count, this is my, we'll call it my primary count, the most favored one that I think is the most valid right now. And that's where we have A, B, and we're working C up. And within that C, 1, 2, 3, 4, and this looks like a mature looking fifth wave. But let's go in maybe on the 15-minute price chart here. Sure, that'll work for me. So yesterday we discussed, once we have something that's taking the shape of a 5-wave move, how do we start calculating some potential levels? And I'll go back to the hourly chart. That'll work just fine. And well, we have the, and I'll just throw some labels up here. We'll call that a wave 1. This is our wave 2. That was a 3. Little ABC down for 4. And now working our fifth. And let's just drop that degree down by 1. I think that's what we're looking for there. Okay. Now that's kind of what I'm thinking here. We got a 5-wave sequence in progress. And as far as those projections, so we have the distance traveled in wave 1 projected off of wave 4. So you got that 5-1 equality. That would take us to 29.7851. Not too far from today's high at 29.5486. So that's a common relationship. We have the distance traveled in waves 1 through 3 off of wave 4, and a 618 relationship for that. Let's see what that gives us. That lines up quite nicely as well at 29.8063. So starting to develop a little cluster here. We have the reverse fib extension of wave 4, and the levels for that 1.382, 2.0, and we got past the 1.382 a little bit today. That came in at 29.44 and went higher than that. But that 2.0 level, where does that get us to? Gets us right in that same area, I believe. Yeah, kind of that 28.80 area right there. So starting to get a nice cluster. And also, if I go to the daily chart here briefly, you see I have a couple of retracement levels of this overall move down. We got the 618 retracement and the 65% retracement, just to show you what those two lines are. Now going back to the hourly, so today we got past that 61.8% retracement, which was around 29.30 and change. But that 65% retracement, now the area between these two is, some people call it the golden zone, so let's just refer to it as the golden zone. So right now we're in that golden zone, so it's a, we'll call that a high probability area to get a reaction off of. And ideally you respect that 65% retracement. You can go right up to it, but as long as you reverse in that zone, you can kind of have this golden zone reversal, right? So the fact that we have all these potential wave 5 targets lining up there, along with being right inside that golden zone, and we have a mature looking 5-wave sequence for that final 5th wave move. It looks like we're very close to a top, possibly tomorrow or Friday, I'm thinking, being that that's the end of the month and Friday will be the beginning of the next month. That's a typical kind of timing aspect to get a major high or a major low. Also, we're ending a quarter, beginning a new quarter, so that's quite significant as well. Or no, sorry, I take that back. We're not ending a quarter. We're still in the second quarter until June, right? So forget about that. But it is still the end of a month, beginning of a new month. So a nice little timing aspect on that. And there's also the little fib divider tool there. So, okay, let me just, like I said, 50% is the most common level for that fib divider. So if we do a fib divider at 50%, that would get us, let me just throw that line up there, that zero line. If we did a fib divider, that would get us to 29.98. Is that what it is? 29.96, something like that. That would be if the wave 4 of the sequence was a 50% retracement of the entire move once it completes. Or if we do a 38.2% fib divider for that wave 4 termination point, that would basically put us right where we currently are. So just some levels to watch for. We've got a nice cluster here of different technical relationships for that projected wave 5. So this is a very high confidence zone to stop and then reverse down from. So watching very, very intently on that tomorrow and Friday as well if we don't get a nice pivot and move down tomorrow there. Okay, so that's what I want to go through here on this hourly chart. Just basically, bottom line message, we're likely in the final throes here of this surge up, and good time to be selling existing long positions if you have any, and a good time to be thinking about perhaps starting some bearish positions. I know tomorrow if I see a move up into this kind of zone I've projected here, and if it starts reacting from there in a way that I find acceptable, maybe look for a little 5-wave down sequence on a shorter time frame, like a 1-minute or 5-minute price chart. If I see that, I may actually attempt once again to sell some futures with a reasonably tight stop, but we'll have to see how it plays out. Okay, so that's what I want to go through here, just showing that looks like we're getting real close there to finding a peak. And again, it could just be the end of this 5th wave, and then we'd be expecting a retracement and then a potential buying opportunity, still a sizable retracement. Or it could be the end of wave C of an ABC zigzag, and then we'd be expecting an eventual move down to new lows. Either scenario calls for a top and a move down pretty soon here. And obviously still currently favoring the more bearish scenario. Okay, that's really what I want to go through on that. Now on the thinkorswim candlestick chart, another area of interest to point out, we're getting close to that 200-day simple moving average, and that's at 3,006 currently. And again, that's right in that area of those 5th wave projections as well. So that's a nice technical confluence. Also, this unfilled gap from before comes into play at 29.9983. So again, just so many technical things lining up here to make a top. I think we're real close. Like I said, possibly within the next day or two, it could happen, or perhaps next week if it wants to take its sweet time. Okay. Now, yesterday we had that potentially bearish reversal there and the dark cloud cover candlestick. Well, we just absolutely obliterated that today. We opened basically near the high of that candlestick and took out the highs. So that's a failed sell signal there. Just slide point that out. And on the Dow Jones Industrial Average, now if you notice the Dow's little move here, this looks even more convincing as just an A, B, and then this is all of the C wave. You can see this is just so lethargic and shallow in slope compared to that initial move up. It's hard to imagine this is 1, 2, 3, 4, or 5. It just doesn't have that real impulsive characteristic. But technically still possible that this is 1, 2, 3, 4, 5 on the Dow as well. But again, still more heavily favoring the ABC interpretation. Certainly either way, looking for the Dow to sell off here as well soon. And there is that little gap up here. Should we go this high to fill in the Dow, that would be 25,226. If we end up going to fill this gap, potential area to look for a reaction at if we get there. and NASDAQ composite. And now I've still got this channel here on the NASDAQ composite. And you can see still within the channel. So until we break out of the channel, there's not a whole lot of confirmation here. The NASDAQ actually most convincingly looks like a potential 1, 2, 3, 4, 5 up in progress. But again, even if that's true, we would still be looking for a proportional retracement to set up the next long entry opportunity, right? And just throw some fib levels up here. So once we peak out here, we'd still be looking for a nice pullback. Even if we do want to become bullish and get long, now just does not look like the ideal time to do that. So even if you're really bullish, you should still be looking for a top and a sell-off here in short order. Also, we're in between the 618 and 786 retracement. So the NASDAQ by far has done the deepest retracement of its overall move down. Just so I point that out. It doesn't look like there's any gaps here to fill other than way up here above the 786 retracement. Highly doubtful, but you never know. Okay, that's the NASDAQ composite. VIX is just dumping today. Let's see, did VIX actually make a new low? Went as low as 30.54 yesterday. Today, 30.71, according to this daily chart. So VIX trying to hold on to that 30 level, basically. Not seeing anything convincing on VIX. I suspect when this reversal finally happens, it'll just be sudden, and there won't really be much of a tell other than those projected levels we're watching. But I don't think this is going to telegraph it for you beforehand necessarily, the way things are acting. VXX. Yeah, new lows on VXX. So that potential VXX double bottom, that's now gone. So again, VXX will probably just surge out of nowhere once things turn around, but it's not, doesn't look like it's going to give us any tells beforehand. And what else here? VVIX tool. Nothing really to speak of here. Not really a VIX divergence. SPX still above the blue moving average, VVIX below the red moving average, so this is still very much not on a sell signal and doesn't even currently look like it's setting up for one. So nothing to speak of here. And one thing I wanted to go through there, so let's go back to this wave chart. Another thing we can draw is called the Elliott final channel, and that's where you connect the wave 2 extreme with the wave 4 extreme in parallel off of the wave 3 top, and that gives you a channel, you know, to basically look for this fifth wave that possibly go up to the top of this channel and then reverse down. And then obviously when you break down out of the lower line here on the channel, that's good confirmation that this 5-wave move is done and that we're now changing back down there. So just some things to look for. Keep your eye on this upper line on the channel. It lines up quite nicely with these 5th wave projections, and definitely exciting to see what happens tomorrow and possibly Friday there. I think we're very close to a reversal. Don't get sucked into the sentiment of, oh, you know, screw it, I'm just gonna go long, buy calls. The market only goes up every day. It's never going to go down again. That's the kind of mentality that starts taking place right near an important top. So just be aware of that. If you're starting to feel that way, it's probably because we're very close to a reversal. Now, like I said, even if this is 1, 2, 3, 4, 5 up, if you want to go bullish, there'll be another chance. It's just not right now. You got to get that nice corrective pullback into a nice fib retracement, and then we can discuss potentially attempting a long if it plays out that way. Or if we start dumping down aggressively, this scenario gains more favor that we're going down to address those March lows. But either way, we're on watch here for a fairly sizable reversal and then a big move down. All right, that's good for now. Serial Trader signing off.